to the J. Kim Show, Hong Kong's first dedicated podcast on investing in Asia. Join us as we survey the land and discover the greatest companies and most profitable investment opportunities in Asia. If this is your first time listening, thank you for stopping by. This podcast is produced every week with the goal of providing actionable insights to you, the listener, with every single episode. And now, onto the show. Hey podcast listeners, just a quick reminder, my company Explorer Equity Group will be hosting the Hong Kong Regional Finals for the StartCon pitch for $1 million competition. StartCon is Australia's largest startup and growth event that is taking place at the end of November down in Sydney, and the winner of the grand prize will be awarded a $1 million term sheet from Right Click Capital. So if you're a startup founder, I strongly urge you to apply for a chance to pitch at the Hong Kong event on October 16th at the beautiful Campfire Collaborative Space in Tai Kwu. The winner of the Hong Kong pitch will receive free flights and accommodations and a chance to pitch on the main stage for the grand prize of $1 million at the end of November down in Sydney. We'll be working with Startup Grant on the event, and in addition to seeing the pitches, you'll also have access to investors and keynote speakers. Also, if you aren't a startup or an entrepreneur, but you're an investor or you're simply interested in the startup ecosystem here in Hong Kong, I also urge you to sign up for the event. For more information, head on over to www.startcon.com/pitch and click on the Hong Kong event page for more information. Okay, let's get on to the show. This week's show guest is YT Siew. YT founded Jirnexu in 2012 and grew it from a two-man startup in Malaysia to becoming Southeast Asia's first full-stack fintech and fin-serve company, building anytime, anywhere customer acquisition and lifecycle management solutions to banks and insurers. YT, welcome to the show.
Hi, Jay. Thank you so much for having me.
Hey, it's a pleasure to have you on. And, for the audience listening in and tuning in from around the world, maybe you could give us a little bit of introduction of yourself and how you became an entrepreneur.
Sure. Well, I started my career, unfortunately, in investment banking, like many people around my age. So this is...
Don't we all start there? Me too.
It was about 12 years ago. So at the time, I remember everybody coming out of college either went to kind of consulting, banking, or some kind of MNC. So I went into banking, spent around 3 years there as an investment banking analyst. I was very lucky to get an opportunity to join a hedge fund. This was in 2007. So literally 6 months after I left the bank, the financial world started to fall apart. And I really had a front row seat to all of this because I ended up becoming the bank's analyst at a hedge fund called Kinnikos, and they are one of the world's largest short-only hedge funds.
Janos, right?
Correct. Yeah. So it's a world you're familiar with. It was really one of the most interesting times in my career, but also scary, right? Because from 2007 to 2010, I saw a lot of banks disappear. But I've kind of retained this kind of deep interest in banks and the financial system. Decided to come back to Malaysia at the start of 2010. It was partly a personal call. My son was born at the end of 2009. I'm Malaysian, my wife's Canadian, and we thought it would be nice if he could grow up with some grandparents around. So we decided to move back to Malaysia. And also personally, having been a professional for 6 years, always wanted to go home and see what it was like to live and work in Malaysia. I'd left when I was 13, so it was 15 years away.
Wow.
Came back and ended up working for a family business for a few years. It was an outdoor media business. And I think it's, I also have this kind of deep fascination with how media has been disrupted by technology. But the wonderful thing about outdoor media is that it's almost impossible to disrupt, right? As long as people still travel and move around, there's still a value in reaching those eyeballs when they're moving around. Right. But it was when I came back to Malaysia in 2010, and I had not lived there for 15 years, so I had to start my personal finances again from scratch, right? I think I still had my children's bank account, but I had to open up a proper adult account. And the whole experience was bizarre to me because I'd been in the UK as a professional for 6 years, and I could do everything online, right? Whether I needed a credit card, a savings account, or insurance, I just went to moneysupermarket.com, selected the product that suited me best, and everything was done and dusted. Go back to fast forward to Malaysia in 2010, or rewind to Malaysia in 2010, and it took me 2 hours to open up a bank account. sitting in the branch. It still takes about 2 hours. It's a fairly miserable experience. To get a credit card, I had to find an agent in a mall, right, who would like fill out the form for me, take a copy of my identity documents. And then for car insurance, I also needed to find an agent, right, the same agent that was servicing my family. And even when I went online to try and find information to see if I could say get a better car insurance price or find a better car to suit my needs, in 2010 it was pretty much impossible. So just selfishly as a consumer, I felt that there was an opportunity here to provide a better service. But I just landed on the ground. I didn't think it was wise to to get back home and start a business from scratch. Now, fast forward to 2012, and that's when Rocket Internet they were just starting their real push into Southeast Asia, right? With Groupon, Lazada, Zalora. And it was interesting because I don't know what Hong Kong was like, but in Malaysia, you could really see the impact that Rocket was having. In 2010, I always joked that people only did two things online, right? Or only bought two things online. That was AirAsia flights and cinema tickets.
Right.
In 2012, you started to see all demographics buying off Groupon, all demographics buying off Lazada and Zalora, just because the value was so compelling. And even till today, I think that's a key kind of indicator of whether our business, right, online financial comparison, will work in a market. Because if people don't trust basic e-commerce transactions, I don't think they're going to trust financial transactions online. So that's kind of my background and how I got started.
Yeah, it's fascinating. I'm particularly intrigued because we share very similar backgrounds. I was a Wall Street guy. I worked in New York on Wall Street for a while, and also here in Hong Kong. And I currently actually work at a hedge fund, so I'm well familiar with your sort of background. But I'm always fascinated to hear about how people come out from industry, whether it's banking or working for a corporate, and just decide to become an entrepreneur. So it sounds like it was almost a personal experience, a personal pain point that you experienced when you moved back, that made you realize that, hey, this is a huge opportunity for me to attack, basically. So that's pretty cool. Thanks for sharing your background. So now, in the time leading up to when you decided, okay, I'm going to do this, I'm going to start my own company. Was there? I mean, you said you were working for for like a media company. Were you sort of tinkering around with the idea at the same time and doing some market research and this sort of thing, or was it what was the catalyst that basically made you in 2012 be like, I'm going to do this?
That's a good question. Now, yeah, market research is a tough one, right? And I say that sitting on the other side, having done this for 6 years, looking into, moving into new markets. And at the time, did I sit there and do a whole load of research? Not really. It was more a case of, I never intended to join that family media business. It was just more of a stopgap. And after 2.5 years, I felt, it's now if you look at outdoor media, it's really just about acquiring assets and selling the assets, right? There's not a lot of value add you can bring. But what was really interesting is when I looked at the I suppose the technology space or the online media space in 2012 in Malaysia, I mean, it was so nascent, right? There was so few startups. There was so few people you could go to for advice on how to start a technology business. There was practically no one investing in the space. There were practically no online startups. So I thought, when I thought about what I wanted for my career over the next kind of 10 plus years, did I want to build a career in traditional media and outdoor media, or did I want to have a go at the time it wasn't fintech, right? I mean, no one was really talking about fintech in 2012.
That's right.
But it was, did I want to have a go at online financial services? So I chose the latter. So it was more of a kind of personal call. It's really tough, and I talk to friends today, right, who are still sitting a job and saying, and asking what's the catalyst to leave, and it's, can you do the market research to prove that it's the best time? I think probably not, right? I mean, if you've been on the buy side, it's almost impossible to time the market from fundamentals, right? I would say it's probably better to be early than late, as long as you can afford it, because when you're late, it's just really expensive to try and catch up. Whereas if you're early, you can kind of control your burn. But it was really more of a personal call. It was just like, well, I would say, and also looking at where Malaysians were. Right, again, in 2011, who was transacting online? Really nobody. But in 2012, you suddenly saw like, I always use my mother as a great kind of bellwether. She started ordering off Groupon, right? And no, it's really fascinating because I look at when she's booking stuff online. Why does she use? I think it was bookings.com. It's like, well, they're giving me points and they give me better rates than other sites, and they're rewarding me for being a loyal user. And she always comes, and if customer service is bad, she'll highlight it and she'll talk about how quickly they responded or not. But I think she's a really nice kind of bellwether of a kind of average customer online and how important it is to build that loyalty in customer service. But in 2012, I could see that she was buying off Groupon and similar sites. So I'm like, well, something's changing here, right? This wasn't happening last year.
That's pretty interesting. It's interesting when you observe trends like that. You just mentioned you're observing your mother's behavior, which I can relate to because it's oftentimes not the people at the forefront, but it's the sort of the ancillary users that you don't actually think to go to first for market research. A lot of times I'm from the States, and a lot of times from the US, if you just sit around and you watch and observe teenagers and what apps they're downloading and this sort of thing, it kind of gives you a good idea of where the next trends are coming. So that's pretty cool. Okay, so let's dig into your company, Jirnexu. I know that you had gone. I mean, now it seems like quite a large, almost conglomerate with multiple different business lines. So, can you walk us through how it first started? What was the initial business that you launched, and how it's evolved to sort of the almost a giant now that it is today?
That's very kind. I mean, it's still very much a startup. Yeah, so in 2012, I look back and I say I had an overly romantic and naive vision, right? Which is, hey, I just want to build the money supermarket of first Malaysia and then Southeast Asia, right? And what that meant was just building the kind of traditional price comparison, online financial comparison model, where consumers come to the website, select the product they want, but when they click apply or buy, we'd send them out to the bank or insurance company. And we did that for most of 2013, and the experience was just frankly miserable. But it was miserable because consumers we were sending customers to bank and insurance company websites, and they just weren't being followed up on. Right? They would leave their information. They would drop a lead. Right? So they'd leave their information on the bank website, and that's where the problem starts. Right? Now that information would usually end up in an Excel sheet. It'd be distributed to a call center, and everything was managed manually. And even if the call center rep did call you, they'd send you a PDF form, ask you to print it out, fill it up, and send it back.
So it was the bank. It was like the financial institutions were dropping the ball.
Yeah, I think it's tricky, right? Because if you're trying to test this new channel, this digital channel, and they didn't necessarily want to invest a whole lot of money into building lead management systems and integrating with their call center solutions. So they were using Excel sheets. And they arguably, and again, in our experience, the call centers probably weren't adequately staffed enough, so they didn't have enough salespeople. Again, they're trying to manage down their costs. So the call center salespeople would naturally just call the freshest leads every day, right? So if they couldn't call you on day one, they probably would forget to call you on day two and day three, because there's no kind of CRM to manage it. Customers would just kind of disappear. And
interesting.
And this is still happening. Right? It still happens all over in emerging markets. Because it's pretty expensive for a bank to purchase any kind of software. They can't buy SaaS solutions, right? Because they're heavily regulated. They have to buy something on premise, and as soon as you buy something on premise, it becomes very expensive. And they typically also try and buy things that can scale. They're pretty tough for banks to kind of MVP products.
Right.
So the consumers were just having a bad experience, right? They come to our website, we'd send them to a bank website, and sometimes they were called, sometimes they weren't. And even if they were called, they'd have a terrible experience, right? So imagine going to an e-commerce site and not being able to buy the product, but being sent to another website indicating interest and waiting for someone to call you back. If that was the case, in e-commerce just wouldn't scale. And that's exactly where we were in kind of 2013. And from a user perspective, it was miserable. From a business perspective, it was miserable because we weren't able to get paid very much because the banks would say, "Well, you're not really delivering customers," and we tell them, "Well, no, you're not calling the customers," and that's not a very constructive it's not a very constructive relationship. So, come the end of 2013, early 2014, we had the founders kind of got together and said, "Well, look, just the pure comparison business isn't really scaling. So it doesn't seem like there's much point in continuing if we're just going to do that. Why don't we try and solve? It's not a very sexy problem, but why don't we try and solve like a basic problem of making sure customers can actually get the product they want online, right? So if you come to our website and select a product, how do we make sure that you actually get that product you want?" And that's really all we've been focusing on ever since. And it's still what we're focusing on today. And we've solved that by building out the technology platform and providing the service to support the platform, which allows the customer to come to our website, select a product, go through the entire application or transaction process, which we control, so that we don't hand over the customer to the bank or insurance company until they've essentially finished the process, and the bank or insurance, or in fact for insurance company now we can transact, so they don't get involved at all. But for a bank, they only take over for online KYC checks or for credit processing. So the key there is really taking responsibility for the customer journey and customer experience. And instead of trying to address it with people, right? So, for example, building large call centers or agent forces, we've addressed it with technology, right? So for consumers, it was all about providing anytime anywhere access to financial services, and then for the banks or insurance companies, it was the business. The business is essentially a digital sales channel, right? Or the service we provide them is a digital sales channel.
No, it's pretty interesting. So I'm just curious as to how did you actually how were you able to bring that? It's almost like the onboarding process of the customer. How were you actually able to bring that in house? I mean, let's say you have a bank, an insurance company, like 2 or 3 different counterparties. Did you actually have to go to each one of them and basically explain your business model and say, look, we'll take this workload off your hands. We'll do everything here. What do you guys need? I mean, it sounds like a lot of work, right?
It is. Yeah. How do we do that? Exactly what you just said, which is we had to knock on every door one by one, and explain to them that we. So on paper, it seems like a no-brainer to a bank, right? So when we talk to an outsider or someone from outside the financial services industry, and say, okay, well, you explain what we do, which is, okay, we're going to go to the bank and we're going to ask the bank to outsource the customer onboarding to us, and so instead of the bank having to deal with fixed costs of people, technology, etc., they could just work with us and pay us on a variable cost base. And ultimately, the bank is still responsible for credit processing, risk assessment. So no skin off their nose, right? That's true, right? And the business teams absolutely buy into that. But ultimately, as banks being heavily regulated, which is fair and the right thing, I believe.
Right.
It is very difficult for a bank to outsource any process. So going from like that first pitch, what I just described, to going live with a bank on a full digital onboarding, which includes some kind of, say, integration, can be a 2-year process. It's pretty hard to shorten that process. It can actually be longer. On the insurance side, it's interesting. On the insurance side, it's more, and I think it's true in other markets as well. As I think, it's generally true that for insurance, there are more regulations around distribution, because the insurance company is trusting you to sell the product, and you're taking money off the customer. Whilst with credit, the risk assessment still sits with the bank. So for insurance, we had to first find the right regulatory framework, or look for the right regulatory framework, which at first did not exist. Then we had to go through. We entered the regulatory sandbox in Malaysia, where we got approval almost a year ago now. Mm-hmm. So on the insurance side, it was more of a regulatory hurdle. On the banking side, it was more of, I would say, like a compliance, risk, and regulatory hurdle, which we had to cross.
Man, it sounds like you've crossed a lot of hurdles. I feel like every time I meet someone that is doing fintech, I'm just whether it's whether it's a trading app or just a solution like you're providing. I just feel like there's just so much sort of red tape that you have to go through, especially with banks, like you mentioned, just to get anything done. I just look at my personal account at HSBC, and they just never bend the rules. So for someone like yourself to come up with a new concept, it must have just been like pulling teeth trying to get these people to understand it and get it actually approved, right?
And understanding and seeing the benefits, the buy-in is pretty quick. But I suppose if you put yourself in the bank's shoes, right, they need to make sure that they behave. They're essentially regulated to be like a utility, right? So every morning you wake up, you turn on the tap, you expect water to come out, right? So every day
Right.
every day when you want to log on to your bank, you expect to be able to get access to your money. So as a result, any institution that takes deposits is heavily regulated, and rightly so, right? I mean, I still haven't forgotten seeing an actual run on a bank, right? When Northern Rock in the UK had to be rescued in, I want to say it was 2007. There were people
Right.
queuing up, right, and they could not
Right.
withdraw their money, and that still happens around the world. So you can understand why banks are like that. But my takeaway from the kind of last 6 years is, or several key kind of takeaways are. Looking back, I suppose it's a key question is, what would you do differently? What would you do it? How would you do, or would you do this again? And I always, for people who are looking at fintech today, I'd say, look, you got to make a decision of whether you want to work with a bank or insurance company, or whether you want to work against them. At the time, we didn't have we didn't have the luxury of being able to raise enough money to compete with a bank. Very few people do still. So we decided to work for the banks or work with the banks as a service provider. But that's a really key distinction, right? So, for example, the guys going into P2P or online lending is completely different, right? You don't need to deal with any red tape, but you take on that risk yourself. So, as a manufacturer,
Right. Very interesting. Okay, so YT, now this is sort of one part of your business, and I know that you mentioned that you were using basically the internet. I know that you guys do a lot of things with mobile because that's sort of where the majority of people access the internet. So you're using the leverage of the internet and mobile technology to sort of proliferate your business. I know that in my introduction I said that your company was Southeast Asia's first full stack fintech and finserv company. So maybe you can explain that, because I know that there's other lines of your business that you're building out, apart from sort of this e-commerce for personal finance platform.
Oh, that's correct. So, by full stack, what I'm really referring to is taking the customer through that entire journey, right, from the first impression online through to getting the product. Now, the core of the business today, it still runs off the marketplace, essentially becoming that kind of digital distribution channel. But what we're launching, I would say early next year, what we technically soft launch this year internally, is white labeling our platform. We get a lot of requests from clients, both in financial services but also outside, who see the value of being able of having the platform that can manage large volumes of customers efficiently through complex funnels. So if you think about traditional e-commerce, there's tons of companies which provide white label services or white label technology platforms, right, which allow you to upload products, manage a website, take them through the payment, and manage the shipping.
Right.
But as soon as you have any kind of complexity in that process, so for example, you have to collect customer information, you need to risk assess the customer, you have to collect, when you collect the customer information, if it requires follow-up afterwards, document upload. There are no off-the-shelf platforms for that, right? Which can do it at scale,
Right.
and that's where we've seen the demand for the platform. So the white label platform will cover both financial services and I would say non-financial services, as general FMCG, travel, etc. The kind of pros and cons are, when you look at financial services, you need to be an on-premise solution. Whilst if you look at other high-value products or complex products, say property, automobiles, travel, etc., not regulated, so we can sell it as a white label.
That's pretty interesting. So I know that you guys recently closed a pretty sizable funding round of Series B. Is that
Correct.
right? And I imagine that this is part of the rollout for your plan is to use that funding to further move this side of the business along. Is that right?
Uh, Actually, that doesn't need a whole load of capital. Um,
Okay.
yeah, I mean, I suppose when you look at the pure technology businesses, a lot of time, a lot of investment has to go typically upfront to build the platform. And one of the reasons why we like this business is because all the investment on the product development has already been done. We already
Right.
have essentially the pilot customer, which is our own platform, and it's been a very robust testing period, right? Because we've had to provide the service essentially for financial services, so that doesn't actually need a whole load of capital.
Gotcha. So let's just quickly run through say the customer experience. If I'm using your platform, what are the various I guess banks or insurance policies or whatever that I can access off of your platform? What is the sort of the process by which I use it? How easy is it to use for me to access, say, a line of credit or an insurance policy? And then what is your revenue model there, and how do you guys make money?
Sure. Before I forget, so I'll answer the last question first. The revenue model is just like any kind of marketplace. So we are paid on a success basis, right? So we're paid for every approved customer or percentage of the loan or insurance policy.
Right.
So that's the business model. Coming back to the user experience, so we when you come to our website, you browse the product. Say if it's a credit card, personal loan, car insurance. Now, if you select a product where the bank or insurance company has engaged us on the express apply model, which is the digital straight through, it moves into a chatbot experience. And we decided to build and launch our own chatbot at the end of last year. And the reason for this is because in Malaysia we saw that mobile traffic, as a percentage of overall traffic, had grown from roughly 50-50 when we first started to
Mm.
closer to like 80-20, right?
Wow.
And no matter no matter how responsive you try and make a website, it's the user experience is never quite perfect. And from what you can see in markets like Malaysia, consumers just love to chat. So we believe that both from a user experience, but also from a user engagement model over time, chatbot was the way forward. So we built our own chatbot and launched it last year. So we went from having one bank to now we've got 11 bank insurance companies using that, and soon the entire website will switch to a chatbot interface for product application. And what this means as a consumer is, once you've selected the product, instead of having to deal with forms, online forms, right, the entire experience is just a chat. It's just an AI-powered chat. So whether it's a credit card or personal loan or now motor insurance, you can go through the entire process straight from the chatbot. So with motor insurance, you can even transact the payment through the chatbot. On the credit side, soon we will. At the moment, I think there's still some processes where the upload is done. Typically, we do it via email, but soon we'll have the full upload done through the chatbot as well. So for
Wow.
the consumer, it really will be a straight through process. The other beautiful thing about the chatbot is that it's an engine, right? So it can sit behind any other chat platform that has an API. And
Wow.
pretty much in any Southeast Asian market, there are leading there's some kind of leading chat platform, and right now almost all of them have an API that's open. So there's kind of the really cool thing about the chatbot, which we didn't realize, I suppose, until after we launched it, is if you've ever had to train salespeople, right? You can train them all you want, but the tricky part is you don't know, you never know, what is it that the salesperson says that where the customer switches off, right?
Exactly.
But the really cool thing about the chatbot is you can see it right, on a live basis every day. You can actually see, okay, at which question are users stopping, right? You can look at your conversion rate on a question by question basis. So it's almost like we're able to train our sales team on a live basis on any individual question. But from the consumer's point of view, they've got this kind of entirely seamless chat-based experience.
That's amazing.
Yeah, from day one, it's always a bit tricky, right? Because if it's a new product and we've not tested it before, it can take a couple of weeks to optimize. But usually after like 3 to 4 weeks, what we saw was that conversion rates on the front end go up, and HR productivity at the back end goes up as well, because more of the process is handled by the AI.
That's incredible. I think that I think you're really on the right track there, because I just think about myself personally. Anything that I have to fill out a form, I hate doing. Any sort of customer experience type thing, I want to talk to someone, but I don't want to call them, right? I just want to chat with them. Like, you want to you want to feel like you're talking to someone, but you don't want to be on the phone waiting, blah blah blah, right? So the chat is the perfect way, and if you can basically apply and even upload documents and this sort of thing and make payments, I think that's brilliant. I think that's really the way forward.
Yeah, and the best part, or the most important part, or one of the most important parts for us is the fact that it's mobile first, right? It doesn't matter what size your screen is, right? A chat interface is always going to work.
That's awesome. So, YT, it's been great hearing about your company. I want to look to wrap up here, but I have just a couple more questions before we go. So, first of all, Jirnexu, it's a very unique name. I want to ask you what does it mean? Where does it come from? And then after that, maybe you can tell us a little bit about your future plans, looking forward to the rest of this year, next year. Are there other markets that you want to try to tackle, and how you're going to move forward?
Sure. So Jirnexu means prosperity. I think the original spelling has 2 X's, but we took it out for simplicity. So it means prosperity in Maltese. We chose it because it had a .com, but really it was for the. I know, right? It seems less and less important nowadays, but it very much aligns with why we do what we do, right? For example, why should we bother trying to make financial product available anytime, anywhere? Right, so that people can find the best product to suit their needs, right? So they can get value from their financial services. In terms of our priorities, it's really just more of the same, right? But I suppose the easiest way to think about this is, how do we keep chipping away at that goal of providing or enabling customers to get the best product to suit their needs anytime, anywhere? And a lot of that is just about improving choice, right? So getting more of the existing banks and insurance companies online, but also continuing to work with them to improve the service to the customer. Again, we're not a manufacturer, right? We're just a channel and a technology provider. So how can we, or what else can we do to convince the banks and the insurance companies to improve their processes, to upgrade their systems, so that customers can have an even better experience? We are looking to continue the regional expansion. I can't share too much about which markets right this second, but there are still opportunities to do what we do in the rest of Southeast Asia.
Fantastic. I'm looking forward to hearing different countries that your product's available at. Last 2 questions I have for you, YT, and thanks again for your time and sharing with us your journey and this sort of thing. The second to last question, which I like to ask all entrepreneurs, and very very relevant to sort of my audience, who's a lot of them are finance professionals as well. So if there's a piece of advice that you could give to maybe someone that is working at a bank right now and might want to spring out and do their own thing or try their hand at entrepreneurship, what piece of advice could you give?
Yeah, I really don't like giving advice, but I suppose when I look back at my experience, what's the most important thing, or what do I spend the most time on now, right? And it's just about people. I suppose people and reputation. If I was to have a luxury of sharing 2 things, on the people side. I was in finance for 6 years, and it's not that. And I would say culture is never quite the most important thing, right? It's very much the case that people are paid to do their jobs. They're paid very well to do their jobs, and people do their jobs, right? But when you leave the finance world, and especially in startups, money to the best people in the market. Chances are you're not going to be able to pay them more than the next guy, right, or the next startups. So why should they join you, right? And that's got very much to do with the culture of the company, the vision, and why should they stay with you, right? Again, it's all about culture. It's all about making sure that their personal goals are aligned with the business goals. And the second one is reputation, especially for a fintech that provides services to regulated entities. Right. There's kind of, in the startup mantra is, fail fast, right, and fail often. But with when you're providing services to a bank or insurance company, you never want to fail, right? Failure is not an option, and they really do value a partner who's consistent and who's there and who they can trust. But that does kind of change some of the dynamics of the relationship.
Right. Totally. I mean, I think that those are both very good pieces of advice. I think, particularly your second point, I mean, the world is getting smaller and smaller because of the internet and this sort of thing. So, your reputation it matters. And so it's always good to do right by your customers and your counterparties. So I think that's very sound advice. Last question, YT, is where's the best place that people can find you, follow you, connect with you, maybe learn a little bit more about Jirnexu?
Probably LinkedIn for me, to be honest. Not much of a Twitter user. So if you just search my full name on LinkedIn, I think you can search me at YT Siew.
Right.
Pretty sure, yeah. So
yeah, we'll have it linked up in the show notes and stuff for the audience. So great. Well, thanks so much for your time, YT. It's been very interesting learning about your company, and I think that I love the idea, and I'm excited to see your growth, and we wish you the best of luck in expanding your company and all the success.
Thank you. No, it was a real pleasure. So thank you very much for your time.
Great. Thanks a lot. Take care. I hope you enjoyed today's episode. All the show notes and links can be found over at jkimshow.com. Come back often and make sure you subscribe, rate, and review. Don't forget to join us next week for another exciting episode of The J Kim Show. I'd love to hear your comments. You can find me on Twitter at jkimmer, JAYKIMMER. See you guys next week. This podcast is brought to you by Hack Your Fitness, the high achiever's guide to getting ripped in under 3 hours a week. If you're anything like me, you're probably working a full-time job or jobs and trying to find time to balance family life, social life, and last but not least, fitness. Look, I get it. I'm a full-time investor and entrepreneur myself, and father of 2. So how am I able to stay fit year-round without spending hours and hours in the gym killing myself on the cardio machine? After struggling for the last 15 years trying every workout and diet under the sun, I finally designed a system that allows me to achieve and maintain single-digit body fat for life in under 3 hours a week. Cardio not required. Head on over to hackyour.fitness and download my free 13-page guide that teaches you the simple science behind efficient fitness and smart nutrition and gives you everything you need to know to finally take control of your life. That's hackyour.fitness.